Anyway, let's discuss personal finance now. Hemant Rustagi of Wiseinvest Advisors now joins in. With gold prices cracking, should investors be increasing their allocation to gold or maintain their status quo? Hemant, hi, afternoon. That's the big question. At this point in time, would you advise people to go out and buy gold? From the day's low today, also we have seen a bit of a recovery, or would you say there are other lucrative options like PPF or even bank FD, given that inflation has now come down?
Well, I think as the gold price have crashed, investors are definitely worried a lot because they're wondering what to do. In fact, I would say that there are mixed reactions coming from investors. While on the one hand, you have investors who are not very sure as to what to do with their existing investment in gold. On the other hand, you have investors who are wondering whether this is a great opportunity for them to make a quick buck. I think the key factor that investors need to really consider today is, at this point of time, is that the reason for which they have been investing in gold and the reason for which they want to invest in gold at the current level. I think gold has an important role to play from, as far as any investor portfolio is concerned, from the asset allocation point of view, because it not only has a negative correlation with other asset classes, but also, allows an investor to basically, take it as a hedge against inflation over a period of time. So I think it's very important for investor to look at basically the reason, as I mentioned earlier, for which they have been investing in gold. In fact, there are investors who have gold in their portfolio to accumulate it, for a special occasion in their life, their children, marriage. So my view is that any investor who has been investing in gold, in a disciplined manner over a period of time with a clearly defined time horizon and goal, they can continue to hold on to their investment and also continue investing, because they can then benefit from averaging. But as for investors who are, in fact, looking at this as a great opportunity to make a quick buck, I think they'll do well to remember that making any ad hoc decision based on the recent past performance of any asset classes, including gold, can backfire, because gold prices can correct even from these levels, and the recovery may not happen soon. So therefore, all those investors who invested in the gold in the last 1 or 2 years, trying to benefit from the price momentum in gold, I think they need to prune their exposure to gold and maybe look elsewhere. There are opportunities in the debt segment here. We have seen that the inflation has fallen below 6%. So we're going to see some more rate cuts. So therefore, there is an opportunity for investors to benefit from inverse relationship between bond prices and interest rates by investing in income funds or mutual fund with a time horizon of 18 to 24 months. On the traditional investment option front, if you really see, the interest rates has already been lowered fractionally. If you look at small saving schemes, for example, Public Provident Fund, it currently offers 8.7 as against 8.8, and the senior citizen scheme offers 9.2 as against 9.3. But investors can invest at these rates till 31st March 2014. For those investors who are in the lower tax bracket looking to invest in FDs, well, we haven't really seen significant reduction in the interest rates, so they still have an opportunity to lock in before the prices fall. So I think there are opportunities definitely elsewhere, but like I said, as far as the gold portfolio is concerned, the key factor is to consider the reason why one has been investing in the gold, and if one has been investing with a clearly defined time horizon and objective, I think my suggestion would be to hold on and continue investing in that.
Well, that's very important advice coming in from Hemant, that it's extremely tempting to delve into gold when you see the fall from 32,000 rupees to 25,000 rupees. Chances are it could go further down. So what you get out of gold is neither a yield nor even a protection of principal. Quite the opposite of what things were up until now. That's important caution to keep in mind. We have a caller who's with us. Damien Andrade from Mumbai is calling us. Go ahead, Damien. What is your question?
Hi. Yes, hi. I've got some investments in some of the SIPs. So I've got DSP, BlackRock, Franklin India, HDFC Equity, Prudence, Reliance Regular, Power Sector Fund. So I'm looking at another fund, which is about 3,000 odd rupees a month, to invest. So is there something that you could suggest, which I can add to the present portfolio?
How many funds do you have already?
About 6 to 7.
And most of them you are speaking about are equity funds.
Yes, most of them are. There will be a couple of them in balance, of mix of debt and equity both. So.
Fair enough. Go ahead, Hemant. He wants to add a new fund. Would you advise that, or would you advise sticking with what he has?
Well, I think the key factor to consider here is the time horizon. Assuming that he is investing for long term, I think he can invest in another fund. That could be a quality mid-cap fund, because his portfolio is currently dominated by large cap oriented funds. So he can look at a fund like IDFC Premier Equity, which has been doing very well. But I think there is also a need to consolidate his portfolio. He has a sector fund, Reliance Diversified Power Sector, and also Reliance Regular Saving. I think sometime you need to create the right balance in your portfolio, not only because some of the funds are not doing well, but also, like I said, to create the right balance in terms of allocation to different segments of the market. So I would recommend that he can switch his holding into, in Reliance Diversified Power and Reliance Regular Saving into Reliance Equity Opportunity. And then he also has very similar looking fund, like you have DSP BlackRock 100 and Franklin India Blue Chip. He can exit from these two and invest that money into HDFC Top 200. So what will happen with this is, I think he will create the right balance, like I said earlier, in terms of allocation to different market segments, and also has the right kind of funds which can enhance his portfolio performance over time.
All right, Damien, I hope that answers you. Thank you very much, Hemant and Damien, for joining us on this Q&A on personal finance. And here's a word for those of you who join us on this segment. Please do join us at the